We're snorting cap rates and shooting up cash flow here at Deal Junkies. Welcome back to Deal Junkies. I'm Gabe Johansson here in the studio with the one and only Mike Nuss.
Yes.
Trevor, GPT Howard, and a very special guest, Cannon St. Peter. Cannon, thanks for being on the show today.
Yeah, thank you. Hearing that intro in person is something special.
Is your last name really St. Peter?
Yeah.
Is it ST or
ST
Peter?
Space Peter, legally, yeah.
How's that? Is that
allowed?
It's legal, apparently.
Yeah, it's actually a pain in the ass because some softwares, some institutions don't accept the space.
Yeah.
Some people think that there's a period. People call me Peter all the time. It's a nightmare.
So you don't write it out as Saint. It's just ST.
ST.
So
pronounce Saint, spell ST.
So you're not a saint.
No,
No, not
Only
anymore.
child.
Not anymore.
only in title. Yeah.
Okay.
This is Cannon's first podcast, so we actually just took his podcast virginity. So you're not a saint anymore.
Is it just Peter now?
It's just Peter. You're just Peter.
Cannon Peter.
All right. So Cannon St. Peter is a friend of ours. You can tell by the way we're bantering. We already know Cannon. But Cannon, maybe the rest of the world doesn't know you, so we want to introduce you to the world. Cannon's a deal junkie, 25 years old, right?
Yes.
Owns with partners roughly $30 million in assets, 170 plus doors at this point.
Yes.
And you're a very interesting guy because you're young, you're hungry, you're smart. You are the director of operations at Peak Asset Management Group. So you have come from the operations side, which is a side a lot of people don't like about real estate. But you have focused specifically on how to scale your property through using technology, AI, a lot of stuff that's new to property management and asset management. So we want to get to know you a little bit, pick your brain. We're going to want to find out, who you are and what you're all about, but we're also going to want to find out some secrets about how to improve our efficiencies and use AI. So this will be a fun episode. So take us back in time. Can you start out? I mean, it wasn't that long ago when you were a little kid, so you got to remember this stuff. Like, were you always this way? Were you raised this way? You've heard the podcast before. We want to dig in. Just tell us your life story and who is Cannon St. Peter?
Yeah, well, being only 25, I can tell you my whole life story in less than 5 minutes. Okay. So
we'll give you 3.
Yeah, I'll try. So
He's not that boring, folks. Don't worry.
I was actually born in Silverton, but raised in Oregon my whole life. We rented and moved a lot, starting in Silverton, then to Salem, Malala, Wilsonville, finally landed in Portland. And that was in 5th grade. And up till that point, I had been pretty independent. My mom had divorced when I was young and spent most of her time putting a roof over our head and putting food on the table. And so it was kind of like, go have your own fun. And I would even work in the summers when I was young to give myself a little spending money. And so I had a lot of freedom and fortunately had pretty good guardrails with friends and friends' families that kept me out of too much trouble. And so that was kind of my lifestyle for a solid decade, just running around towns. Phones were barely accessible at that point, so you still went and rode your bike around and whatnot.
The last of the latchkey kids.
Yeah,
exactly.
I literally remember
Free range.
Yeah, free range, the last ones.
It's an interesting generation to be a part of because I want to say I was in 3rd or 4th grade when phones started to proliferate through my friends. And I remember being on the bus bragging that I was going to have, my mom's going to buy me this smartphone. And I remember getting the smartphone and the calling and texting was fun, but it had this little, it had 5 buttons on the touchscreen. And one of them was the internet. Mm-hmm. And I remember clicking on the internet and it was so slow. I was like, this is the waste. This is a waste of space. Get this off my phone. So I grew up in that generation, but I was pretty independent through, all the way up until being an adult.
You had siblings or just you?
One younger sister,
Okay.
2 years younger than me. But I would spend, for better or for worse, a lot of time with friends and my friends' families.
Okay.
I'd crash on couches all over town. Not because my home life was terrible. That's just like what I got used to.
Yeah.
And they had a lot more food in their pantry. So,
So you started life out as a mooch, and then what happened?
But he
yeah,
said
I
he was
guess we all
independent.
do, but
Until he was adult. So you're an adult and no longer independent. You're independently living on friends.
Now he has
staying
a
at friends'
wife,
couches. Oh, okay. So you don't
Married
have to
now.
be an adult.
now I mooch off of her.
Okay.
No, so I mean, where this like led into something more interesting was around freshman year. I don't want to like jump too far ahead, so you can stop me. But
High school
year of
freshman?
high school, yeah. Prior to that, I had got exposed to the concept of compound interest. So I liked numbers, I liked money, and somebody explained compound interest to me at like a very high level. It could have even been a YouTube video, as far as I remember. And I found that really fascinating, that the idea of like some kind of success today would translate to a nonlinear success later. But I had no money. I had hardly any income. I had no money. So that wasn't particularly useful in the context of dollars as like a freshman in high school. But I didn't see any reason why that wouldn't also be true for other things we do in life, like education or like families. And I figured if I can't do anything with money now, maybe I can do something with the tools that I do have and use compound interest to my benefit now and have like outsized returns later. And so freshman year, I went to David Douglas in Portland, and I never went back to high school after that because that was the first like major decision I made to kind of take control of my future. And I can like go down that road. But
You mean like you dropped out, or
I wish it was that cool of a story. No, I did an early college program, which is, I think people are more familiar with these now. Like most of us have a touch point with somebody that did that. But effectively, the program, it's like a small charter school that basically paid for me to go to college instead of high school. And my college credits were more than enough to satisfy my diploma in high school. So as of like sophomore, junior, senior year, I did not go to a high school. I went to Portland Community College in Mount Hood. And then at 18, graduated with my associates, which is just like your 2-year general study stuff, and my diploma on the same day. And my like
for free?
for free, yeah. They paid for the whole thing, and
We should all just do this.
Yeah.
it was incredible.
He's a tag kid too, latchkey and tag.
So
talented and gifted.
Well, I was good at solving problems, and at that age, problems were homework. I wouldn't say I was like particularly smart. It's not like I was in these advanced classes or anything. I just knew how to get stuff done and get like A's and B's. I wouldn't even say I understood a lot of the coursework that I was doing, but I could pass.
What was your motivation to drop out of high school to go do this college program?
Honestly, like, I think it was just like this very self-serving thesis, which was my only frame of reference was my peers. And so doing this program put me ahead of them. And so like from a compounding perspective, it's like, well, I'll be 3 years ahead of them, but if that means I can earn a little more 3 years from now.
Well, you're really 5 years ahead when you graduated at 18 with an associate's degree. You've got it's half a decade, because otherwise you have to graduate high school and then go 2 years of college, get your junior college out of the way.
Yeah, and pay for it most of the time.
Yeah.
So it was a simple idea, which was relative to my peers, I would be ahead. That's all I thought at the time.
And you came up with this idea. You pitched it to mom and said, I'm going to do this?
My mom found the program. She was like working in the education implementation space. And so it was just by like happenstance that she came across it. And I think as a mom, like, it sounds exciting. Your kid could maybe go to college early.
I mean, that's a great leg up.
Yeah. And then I bit. In part of, I would say like something that enabled me to do this without giving up too much of like the high school experience was I had a fantastic network of friends in high school. And there was paths to being involved in high school activities without actually having to go. And so I didn't feel like I was giving up that much by taking the program. Now, I didn't know. I could have been wrong, and I would have had been okay with that. But I would say, like, in hindsight, I was right. but it was only by coincidence.
So you don't have to be super smart to get into this program. You don't have to have a ton of money to get in this program. So tell people that are listening, if they're thinking about, hey, I should fast forward my kids, what's the step they take?
So, I mean, you can, like, bottom line, you should probably just ChatGPT your circumstances and try to find a path for the outcome that you're looking for. Like, very specific shout out, I think this charter school still exists. It's called Baker Charter Schools. I don't know if the structure is still the same, but I believe there are dozens of these in the country and in the state now. So I don't think it's a difficult thing to access anymore. And if that's a good fit for your kid, I strongly encourage it. Like I said, the coursework wasn't really particularly challenging. I mean, if any of us have done community college classes like 101 economics, I mean, at that time, AI didn't exist, and I could pass those classes with like Googling and YouTubing stuff. So I don't think I was special in that sense. I think that's something.
Economics 101 at Portland Community College changed my life.
Well, I took it at Mount Hood Community College,
right,
so
there
I
you
won't
go.
speak
That was
to
a
their
lower
program.
level. I went to both. I know.
Oh my goodness!
All right, so you're 18. You got a 2-year college degree. Now what happens?
So one mistake I made is I was so hyper fixated on that as my leg up that I really didn't look a layer further. Like, once I finished this program, I didn't have another program lined up that was going to keep me ahead. And so at the last minute, I was like, well, I should probably continue my education because I'm like halfway done with a bachelor's. I think I want to be an engineer. I think OSU is a good engineering school. That's what I'm going to do. So I applied to one school, OSU. I got in. I went into their engineering program, found out that problem solving doesn't work in like chemistry and stuff. So I was not enjoying that as much, and eventually decided I didn't want to be an engineer. I switched to their business school after a term, but knew that OSU wasn't like a particularly great business school. And so I figured I would leave that school either for U of O, which I think is like, I don't know, considered a little more prestigious in business, or just go back to PSU where I had roots, I had roofs over my head, I had income from jobs that I could go back to. And so that's what I did. After my second term at OSU, I went back to PSU and finished my bachelor's at that school while working full time.
And what'd you get a bachelor's in?
Business management and leadership.
So you got out of the engineering space?
Yeah, left it altogether. Never took another
You keep
STEM
talking
class.
about solving problems. Somewhere along the way, you decided you liked solving problems. What's that? What is that?
Liked might be a strong word until recent. Like, now I like solving problems.
You're geeking out on it now.
Yeah, before it was just a means to an end. Like, it was like the current objective is pass class. Class is hard. Problem. So
he's a robot.
Yeah.
You guys call me a robot.
He's very robotic. Yeah.
So yeah, it was really just my survival mechanism for the longest time. And then it became my greatest skill, and I started to love the skill. And then that's what is like my focus now in my operation.
Okay, so where does real estate come into the picture?
So I was working in the water industry. All of us here probably own a backflow assembly. I know a lot about backflow assembly. So I was working in the water industry. I had like a salary job. I was side gigging like Friday, Saturday, Sunday in that industry, and I was doing a lot of driving. And during my downtime driving, I was like, man, I'm just burning hours driving around, listening to music, but I'm not paying attention to that. I'm just thinking in my head I should switch to podcasts. So I switched to podcasts. And part of the reason why I did this is, had my friends at the time asked me if I was an investor, like if they asked me that question, I would have said yes. And I was like, okay, but I don't own any assets. So I would be lying. And I figured that was a problem. I started listening to investing podcasts, and it just so happened like the one that I started listening to, eventually it was more like stock investing, but eventually they mixed in a real estate episode like every 5 or 6. So I listened to like 5 stock podcasts, and I'd be like, eh. And then I listened to the real estate one, and I was so excited. I was like, an average person can get leveraged equity. I can sweat a little and build something greater than I otherwise could. I can't contribute to Facebook, but I can contribute to a property. And it just became so much more interesting. And then I just hyper fixated on that.
What podcast was that?
It was called there's a network. I don't know if it's still popular, but the Investors Podcast Network.
Yeah.
And they had a sub podcast that was called Millennial Investor, which I'm not even a millennial. I'm even younger than that. But and then the host was Robert Leonard, who's a acquaintance of mine to this day. But it's just a coincidence. I actually dabbled in stocks for a while. Like I thought that was my path forward. But I was like, man, I'm going to need a lot of cash to hit these goals. There's no real safe path for debt for me. So I'm going to switch to real estate.
What was your experience like in stocks?
Not pleasant. I mean, my version of I was like, okay, I'm going to wake up when the market opens. And so I'm like living with my, at the time, girlfriend's family. And I'm like downstairs at the kitchen table at 5 a.m. with a coffee, like waiting for the market to open with an account balance of like $1,000, thinking today was going to be the day. And it was just like underwhelming. And I pretty quickly started sleeping in again.
So it didn't excite you?
No, I think it's still interesting to me, but just not being able to like really participate, like the action is put the money in, take the money out, was just pretty boring. And I'm not at a phase in my life where I need boring. Not yet. And so...
And it's hard to make money in the stock market with $1,000.
Yes. Yeah. I don't know what I thought was going to happen.
You make $8 on the year.
This was kind of in the era when like all the COVID checks were going out and the economy was booming, or the market was booming. And crypto was going like to the ceiling. So it was... I think there was enough hype that I believe maybe there was something I could do with $1,000, but
but that's
not sustainable.
When you think about it, it's like, okay, I can take my 1,000, even if I, 200% return, you take it to $3,000. You only have $3,000.
Yeah. But you killed it in the stock market.
Yeah.
200%.
Godly returns.
You take that same hours to real estate, and you can take that $1,000 and turn it to like $1 million by just spending your time, like what you did.
That sounds more exciting.
I think so.
So,
nah, let's gamble for 200%, $2,000 returns.
Yeah, and then like to go to 2,000 is 100% increase, but to go back to 1,000 is only 50% loss. So it's just like the metrics weren't working. By the time I started listening to those real estate episodes, I just switched to all of my information consumption to real estate, and then.
Did you pick any favorite pods during that time? What were you listening to?
I was listening, like, I am not exaggerating when I would say I was probably listening to like 50, 60 hours of podcasts a week, or YouTube videos, or like audiobooks. It was just constant. A lot of people, like if you know me, I don't always do it at an event because it's kind of rude, but I almost always have like a headphone in my ear. I'm listening to podcasts or I'm on the phone 24/7. Like when I'm awake, it's probably a bad habit. I do it a little less now, but for years I was doing that. And so it was basically any podcast with real estate in the title. So Bigger Pockets, like Deal Junkie. It wasn't around when I started listening to a bunch of podcasts.
Did Deal Junkies change your life?
I do love Deal Junkies. I think
this guy, he's had so much exposure to all the other ones that he just knows gold.
Yeah, well, honestly, like this is a bias review for you guys, but I genuinely think it's the most valuable podcast, especially if you're operating in Oregon, because the market specific information is 10 times more valuable than a better podcast that doesn't apply to us. Right. So not only is it a good podcast, but it being market specific is why I like it so much.
That really felt like a backhanded compliment.
I'm trying to be like,
we're not great,
but they're not in Oregon.
You're good, but specifically in Oregon,
yeah,
they can be great.
If I said you were the best podcast, like blanket, nobody would be like, "Oh, the fuck this guy." I have to
you want
that,
credibility?
So. Yeah.
Oh, okay.
We'll edit it. We'll have AI edit it.
Yes.
So you'll be saying this is the best podcast.
Use your AI agent to do it for us.
So I guess to go, like, that's where I got introduced to real estate. I never had any mentors other than like my mom would be like, "You should own real estate." Everybody thinks that's where like all the money's
But they
made.
don't know what it means.
Yeah, yeah. They just like she had owned.
Be a broker.
It's funny. My like immediate family, other than like a couple grandparents, have based like my mom and dad don't own real estate to this day. So I had no exposure to this. Even like mentors I had, the most they would own is like their house. So I had no exposure to this until podcasts really. What made me go a layer deeper, because you can stop at podcasts and show up to meetups and never actually do anything. What made me go a layer deeper is I had finished my degree, I was working this salary job, and I had several part and full-time jobs since I was like 12. And basically, with almost every one of those jobs, I would get some kind of unexpected and like larger opportunity than I would have otherwise like thought was reasonable. So it'd be like I'd get promoted faster than they say you're going to get promoted, or I would get these like soft equity ownership conversations. And after that had happened like 4 or 5 times in industries I wasn't that excited about, I did start to think maybe the through line was me. Like maybe the reason why these opportunities kept coming was I was doing something to attract them. And I figure, and normally like the longest I'd have to wait for one of those opportunities was like a couple years. So I figured if I just go to real estate, somehow get into the business, after a couple years, I should get some interesting, exciting opportunity that I wasn't anticipating. And if I was wrong, I would only be 23, 24, and I would just go back and, take one of my prior jobs and just suck up my pride and move on. So that's what I did. I can tell you like how that happened, but
I think it's interesting like how you got into that.
I mean, it's ridiculously valuable to the audience.
Yeah.
So
you added value everywhere you went, but you ultimately had to pick a path where something was going to add value back to you. So you ended up taking a job in real estate?
Yes.
Is that what you're saying?
Yeah, tell that story.
I think as a young person, it's easy to be influenced by like your leaders and believe that like you should just blindly follow them. Like with the first, because you go from no opportunities to this person hired me and they see something in me. And so I think that's how people kind of get rabbit holed in industries they're not super excited about. And that's not always a bad thing. But for me, making the jump was really just luck. Opportunity combined with like
Preparation.
Thank you. So this is kind of a funny story. I don't know if you guys know Dooney Johnson, but he raises a little money. He's started in our market. I don't know where he is now. But so when you have no network and like you're really young, you don't get cold like emails and texts and LinkedIn messages of people like phishing. All of us, like we get dozens of these a week, people trying to do business with us. So, but when you're young, you don't get any of that. At least when I was like 5 years ago, you don't get any of that. So when he cold DM'd me on LinkedIn, I was like, wow, he sees something in me. This like, he's interested in doing business with me. Later I found out it was just like an automated system. It was not like, it's just because I had OSU in my bio and he went to OSU. Like I totally got catfished or something, but he was a super friendly guy. So I had a call with him and long story short, like he was kind of looking for people with money and that was one of the only things I didn't have. But he invited me a couple weeks later to a real estate meetup. I don't even know which one it was, but in Portland at Lucky Lab. So, Mike, maybe you knew which one that was. But
it was the West Side Investor Network.
That sounds right. So he invites me to that. So this is like, you can make mistakes and still show up. So I went to the wrong Lucky Lab. I show up at the bar. I'm like talking to the bartender. I'm like looking around the room. I'm like, none of these people look like real estate people. And I'm like, hey, is there like a back room where all the real estate people are? And he's like, no, you're probably at the wrong location. So I go to the other location. I'm like 45 minutes late. And when I show up, they're doing a case study night. And so everybody's going through these deals that they did. And most people are shouting out Merchant's Mortgage and Bob Thomas, who was in the room, because they had closed with hard money in the front end and then they did some kind of burr and refi'd out. And so they would just shout them out at the top of the deal. Like, where'd you get your capital from? Merchants. And because that happened like 4 or 5 times, I was like, I should probably know that guy. I mean, I'm here to network. Everyone's talking about that guy, so he's probably trustworthy. And I just go talk to him. And later, by the end of the night, I was like, you give me a job, I will quit my job. I was like, I don't care what. I mean, I didn't negotiate against myself, but I basically said, pay me anything and employ me, and I'll come work for you. And with a little bit of follow-up 2 months later, that's what I did. I went and worked for him as the first property management employee in his property management company.
See, that's an insane thing to know you want it. Because most people are like, pay me $100,000 and I'll come do that. And you're like, I just want to be in this industry and like go for it.
Different motivation.
Yeah.
You weren't chasing dollars, you were chasing the opportunities and the education.
And chasing baseline.
Well, that's the compound interest like theory and thought process that you have. Because like I was having this conversation with my buddy the other day. He's like getting in the business. He's like, I want to get paid $100,000 for the work I'm doing now. And he's like a month into this new business. I'm like, dude, like that's not how it works. Like you'll make no money to start, you'll add value, and then you'll make a lot of money later.
And one of the advantages I had is I wasn't married yet. My expenses were like next to nothing. I had very little debt. I had no kids. And so I think if any of those variables had been different, I couldn't have taken so much risk. But like look at your risk profile and then like take action accordingly. Don't listen to the next guy because his risk profile is different.
Absolutely. There's also two things I heard. One, at an early age, you were looking for a quicker baseline change. So going to college and high school was you recognizing I'll have a leg up, a different baseline reality than my friends. And then there's a point in time where you recognize your self-worth. So you had multiple offers and probably didn't realize the self-worth that you had when you initially got those offers. But after 4 or 5, you realized, oh, I'm the through line of that process. And so now you're looking for a different baseline, a different environment. You understand the value of that. You now understand your self-worth. And you understand that if you bring your worth to the table with someone who has a significantly different baseline, you'll now grow and step into that baseline. And that's what I've watched, because that was what, like 22, 20?
Yeah,
2023?
22, I think was my first year in the business. So, and to the baseline point, like even if I thought, I didn't think I could, but even if I thought I could go out and make $100,000 a year doing anything, I could have easily been attracted to that. But I still knew that wasn't going to get me to certain goals. I mean, at the end of the day, I would be trading time for money, and even $100,000 a year, you can live an amazing lifestyle. But if my goal is, I'll tell it to you later. But if my goal is a certain number of millions of dollars, $100,000 a year is like a dent in that after expenses. And so when it came to baseline, I was looking for like a semi-unlimited ceiling. And every other opportunity I had, I perceived much lower ceilings. Maybe they had higher ceilings than I thought, but I perceived lower ceilings.
Yeah.
And real estate, especially being on like the owner-operator side, it's unlimited. And relative to my goal, I wouldn't even have to be that successful to hit my goal with the ceiling being so high.
Yeah. It's wealth over income. You recognize at a young age that wealth is more important than income.
Yeah.
And the education. You're chasing the education. So you got out of school and you said, oh, instead of going to college and keep going, I'm going to go get an education. I'm going to learn from these guys. So
yeah.
Bob Thomas is a very intelligent man. How did you convince him to hire you?
I was cheap.
But sometimes that just brings more brain damage into your organization just to hire somebody cheap. Like he obviously saw some value in you. What was that you presented to him that was of value?
I think on one hand, like the true answer is to some degree it was timing. Like I was ready.
I'll tell you what he saw in you.
You're asking him right now?
No, it's always in his contact.
Oh.
So I got Alex's contact from him, and I got Cannon's contact from Bob. PDX, young real estate investor, potential peak hire.
Wow.
So
potential. So I hadn't convinced him yet.
Yeah. You had to convince him, but you planted the seed and he recognized it.
And initially, it was maybe some degree of timing. Like he had a need, but I was ready to make the move. I think had I been like a little wishy-washy on filling that role for him, then it wouldn't have been the best fit. And then it did take some follow-up. It was like a couple months later that I got hired, and that was through just like kind of a ruthless, like, hey, let's sit down. Hey, let's sit down and let's work this out. And they were probably hesitant. I remember my sit-down interview with him and his partner didn't go like particularly good. I mean, I had accomplished a lot, but it didn't sound that good in an interview. I mean, I had no real estate experience. I had no net worth. I had really no network. And so it was just like, I basically promised I will work harder than anyone else, regardless of what you could pay them. And he had to believe that was true to move forward.
So he gave you a shot.
I don't think he had to believe that you would work harder. I think he believed that you had the skill set and the efficiency to make their network more valuable by supporting them in what they needed. So you didn't need to bring that to the table. You needed to keep them organized. You needed to get into operations. You needed to solve problems that they were too busy solving. So sure, working hard is all that, but it's talent. That's why that's in your contact card, is because it's recognizing talent. Now, are you going to follow through with the work ethic to follow up with me multiple times to force an interview to show that you have more than talent?
Yeah, and there was probably several points that I like accidentally was convincing them that it was a good choice. Because this was like, especially, this is one of my first jobs, and it was one of the first ones that I went out and pursued. A lot of the stuff I had done before landed in my lap. Mm-hmm. So this is something I went and like convinced. And then I will also say, whether you've already been hired or you haven't yet been hired, like being reliable in this day and age is like you stand out from the crowd. Just being reliable. If you just respond quickly, like you respond your email quickly and you pick up the phone every time and you do the things you say you're going to do, like that's a pretty good employee.
Goes a long way.
So if you can just do that much, you can figure out this skill set later to like maximize. And that's what I did.
So you jumped into ops. This is
boots on the ground, posting notice, scooping dog shit, like fixing little plumbing leaks, like, and just incremental improvement. Like not even, this is the path. We're going to do this regimented. You're going to learn and we're going to get you here. It was just like tackle one problem at a time. And if you do it well, we'll tackle the bigger one.
That's cool.
That's how you build a property management company.
Learn that the hard way.
Yeah, so you started learning these skills, seeing how it operated, and then you eventually like moved yourself up in the role to where you're running the whole operation at that point. But when did you start like buying your own deals too within there? So
on the like working my way upside, it was, well, I'll speak to the first deal first. So when I came onto the company, one of the only things I was kind of like asking for, I was like, I basically don't care about salary, benefits don't matter to me too much, but like I want to buy my first deal. And I was okay with it being a house hack or flip. I didn't really care. The idea of having my name on some piece of real estate was the part that excited me. And so originally my goal was to buy it before I had turned 21. And I failed that goal, but bought it later that year in November of 22. And basically it boiled down to like, nobody was going to do it for me. And so when I realized that like it wasn't going to land in my lap, I just said, this is my very specific goal to buy a deal. What's the fastest way to do that? And so I just went to meetups in the Portland area, and I would just only talk to wholesalers. So I would just go around the room and basically be like, you a wholesaler? No? Okay, nice to meet you, but I'm looking for wholesalers tonight. And I did that like one meetup, talked to this wholesaler, young guy my age, who was working for somebody else. And he was like, yeah, we actually have a deal like 2 blocks from here. You should go look at it tomorrow. And he was like, yeah, it's single family house. I think we're asking like 2. And he didn't even finish saying 2, like whatever. I was like, 2's a good start. Like, let's go look at this thing. And so I go look at the deal. It is like 1905, just rough, like super rough. But I didn't perceive it that way at the time. I was like, I'll come here, I'll swing the hammer, I'll throw all this stuff away. This is going to be fun. And so I ended up buying that deal, the 100% leverage, in November
How'd you get 100% leverage on it?
I got a second I went private money first and then second for the rest.
He's going to tell us why you don't just network with wholesalers and why you need to network with flippers and lenders so you can get a other perspective.
Did this deal go bad?
I don't know, but I can just read where it's going.
It did not go bad in the sense that I learned a tremendous amount for like the lowest cost I have ever learned anything. But like stress wise, it's not a deal I would do today, or I would do it differently today. That's how I would say that. So the basis was great, but I executed 2 exit strategies at the same time. It's okay to have 2 or multiple, but executing at the same time was a mistake on that deal.
What were your 2 exit strategies?
I wanted to burr the deal because everybody around me was buying and holding. And so I was very fixated on that. Even though I had no active money, like it would have been better to focus on flipping at that time. But everyone else was burring, so that's what I wanted to do. But I did a renovation to like a flip standard. and then I held it. So I put more into the deal than it needed to hit the rents, but it was also like I bought it in November of 22 and refied in like whatever May of 23. Like
when
rates were spiking, and
250 bips change by then, maybe even 300.
It was insane. But at the time, I didn't even care. Like I kind of knew that rates were spiking, but
you have no reference at that point, though.
I had no reference, and I was so fixated on name on real estate that I was like, the rest will figure itself out. And to some degree, I think that was a good perspective, because I could have just been scared for the last 3 years and done nothing. But I was lucky to get it at a great basis, because that, in the end, like at the end of the day, made the education cheap.
So did you sell it or you keep it?
So I did. I successfully refied. I got a little cash out and held it for a year. And then when that renter moved out, I sold it.
That's a great deal.
And I did
I work with a wholesaler. They gave you a deal.
You bird it and you pulled cash out after your whole basis.
Yeah, I think
that's a pretty sick deal.
I
you got paid to.
Yeah, I mean, I bought it for like I bought it less than the land value, which was kind of like a funny.
That's helpful.
I didn't know that until we were doing my taxes, and they were like, "We've never seen like the basis lower than land value. We're not sure how to do this." They figured it out, but
that's a ratio. It's not that hard.
Yeah. It was.
But you bought a deal at a great time. November of 22, market had already crashed.
Yeah. So the basis, it was like, I think I bought it for like 200. What I did, I overspent on the reno. I probably spent like 6 figures on the reno, and then placed the tenant. I got a little cash out. I don't know that I don't think I got all my cash out.
Okay.
But I got like a percentage of it out. And then when I sold it, I did get cash at closing, but I did the numbers like after it was all said and done, I like lost or made like $500. But that was after like breaking my back for weeks, calling in favors from friends and family, from vendors that I had good relationships with. So the 500 wasn't really the painful part, like not making that much money or losing a little bit. It was the time, and it was like, it was taking resources from other people for something that only amounted to education. Now, in hindsight, the education is far more valuable than like, I would not trade that education for just like 30 grand and learning nothing. So, but at the time that was painful. At the time, I didn't perceive it that way. I was like, man, this was too much work.
That's crazy, because you learn more from doing that one deal than you do in 4 years of school.
Yes, I think school set me up for some of my success, but then like ultimately doing the thing is at this point 10 times more valuable than the school itself. But my mom she kind of talked me off a ledge one time when I was frustrated about school. And she was like, at the end of the day, like, you're learning how to learn. And I don't regret spending money to do that, because by the time I got into a position where I could be in a career or contribute to like a bigger industry, they at least didn't have to teach me that.
Yeah.
I was bringing at least that I could work my way through a problem. And my version of that was school. I don't think you have to get that through school. But I was glad I paid for school. So I at least brought that skill set when I started in real estate.
How much money do you think you were going to make on that first deal?
I honestly didn't care.
I just wanted to own it. You wanted to refinance it, get your cash back out, and keep going, and just rent it. If you broke even, you were fine, figuring over time you'd make money.
I figured, I think like best case, I was like, I'm going to get all my cash out and I'll be able to hold the deal. Funny thing, like when you're not making that much money and you have very few assets though, like negative $100 in cash flow every month, or like a little $50 repair is painful. You're like, this sucks. I don't care what the tax benefits are. I don't care that this is going to appreciate. Like in the day-to-day, that was painful. Having an active income that couldn't just like easily subsidize losses.
One of the reasons I'm not a fan of Robert Kiyosaki and Rich Dad Poor Dad was when I spent that $26,000 on real estate package, one of the whole book they gave you was the math. And it's okay if you're negative $100 a month. That was literally their example, was negative cash flow is okay because on paper, interest write-offs, depreciation, you actually create wealth.
Yeah, except in my refrigerator, there's no food now.
Correct.
On paper, I'm rich, but I'm starving to death.
There's even another local guy, a mortgage broker, who wrote a book with another MLM guy, and it was called Borrow Smart, Retire Rich. And it was that exact same premise, which is pull equity out of your house, put it in the stock market, make a margin on your interest rate, and this is how you build wealth.
Ooh. That sounds like a bad idea.
Dude, That's what I did. Oh, that's what I did. But I parked it in the stock market so I could use it later. But there's ways to take risks and there's ways not to take risk. And evaluating it, yes, you need to know the reality of the situation, which it is negative in real life. Sure, on paper it can be great, but you got to understand what real life is.
So keep enough cash in your bank account to live life, and then whatever's left over, if you want to leave it in stocks for a while before it goes into real estate, that's fine.
Yeah.
But don't take all your equity out of your house and put it into the stock market.
Well, if you're making like $12,000 a year and then you lose $1,200 on your rental, you're like, holy shit, that's 10% of my money.
Well,
but if you're making $100,000 and you're putting $100 a month in principal pay down, it's like
no big deal.
it's like a 401k.
Yeah,
Well,
but it's all relative to your scenario.
Yeah.
And that's exactly right. You have to back in your like risk tolerance and like your bigger picture. So I have taken like insane risk and been very leveraged, and like I'm protecting these things in different ways that we can talk about, but I've run my bank account down to zero multiple times in the last 3-4 years. And that was okay at the time. Like I didn't perceive that I had that much to lose, and I was okay with a reset, and I was okay taking the upside for that risk at the time. But now, especially recently, like being married, like a couple of things that have changed recently, I'm excited to talk about. Like I feel like I have more to lose, and I'm transitioning into just a larger degree of protection. It's not like I'm going full liquid, pay off everything, no debt, but I'm going to protect the things I'm not okay losing. And that's just a different risk profile. And like, I probably won't run my bank account.
I think for you too, it's not protecting the things in the case of losing them, because you'll probably figure out, even if you ran to zero, how to make it work. But the stress that causes to go down to zero and be like, ah, shit, not this again. Because like when I ran my bank account to negative 250,
250,000.
250,000, yeah.
The bank's calling Trevor. Can you make a deposit?
The bank stop letting stuff flow through there?
Well, Mike,
negative means he's borrowing.
Here's how you do it. You apply for a lot of credit cards.
Yeah.
You get 5 at $50,000 a pop, and then you max all those out.
Yeah,
and that's how you go to negative 250.
I never did that.
That's a different risk tolerance.
Well, that was because I was like, oh shit, how do I pay for these? Because I'm at zero and I don't have any income. Where do I get some money from? So I borrowed at 30%. But that, like, the stress that causes is not worth it. It's not like, because I didn't lose anything. Like, I figured it out. But like the amount of time you waste being like, oh shit, how am I going to deal with all this? Versus if you just sit on cash and you're safe with it.
Yeah, when your risk profile changes or like your relationship with changes, it's not just money. And typically you're looking at things other than money. And that's what changes your risk profile.
It's interesting that you're stepping off. You're not pumping the brakes, but to me, the way I describe it, I'm 50, so I'm twice your age. I didn't buy my first deal till I was almost 40. So you
bought a house when you were 21, dude?
I bought a house when I was when I was 19.
Oh, 19.
Yeah.
I lived in
Trevor.
it. That was not an investment, although it did work out. That one worked out.
Your own house is your best investment.
No.
I don't know.
Dude, you need to get your
talk about one.
$26,000 back from
I
Kiyosaki.
do. Absolutely.
That book would have told you your house is not your best investment, Mike.
For the average American, it is.
Oh,
I have
we're not talking
a take on that. I'm excited to share.
Oh, share it now.
The deal
Let's hear it.
episode. Oh, it's giving away my secret
Yeah,
sauce.
you can
Secret
we're
sauce.
43 minutes in.
Okay, let's do it. Start giving us all the things you're excited about. We want to hear about it. Talk about whatever you want to talk about.
Well, I would say like my real focus right now has been operations. That's really where I bring value in real estate deals. So if it's most of my deals are in partnerships, most of the time I'm the partner contributing like a lot to the stabilization phase, due diligence, and like project execution. And we're doing like almost all value add, either from a management or like physical perspective. And so I'm really leaning into that. I think up until like the last year, I was guilty of shiny object syndrome, where I was just always looking for the next best thing. And I was willing to pivot, and not anymore. I'm not interested in anything other than acquisitions and operations. And so there's a lot of exciting things happening in that space. I think there's a lot of exciting things happening in any space if you're focused. And so because I'm focused and because that's my priority, that's where we start to get into, like, we use a lot of productivity tools, is a phrase I like to use, in in these businesses, in these goals, to make them more efficient, increase margins, decrease risk, like better quality life for me and my teams. And so I'm really excited to continue. Like, I'm done with shiny object. I want to continue leaning into operations and acquisition, and then refine those teams to be like world class. I mean, I want to be a relatively small operator, but I want to be world class at what we do.
Well, this is how you got your name on More Real Estate, right? Because you added this value through your role and you started getting equity in deals through this trade-off of work.
Yeah, I would say for a while, I didn't exactly know how I was going to own more real estate, but my default was just like bust my ass until the opportunity is there. And so just like ruthlessly contribute value with no expectation of return. And if you're working with the right people, that typically produces some kind of opportunity. And so one thing that did kind of come to a head was like, you don't have much leverage unless to some degree you're irreplaceable. So that was a path I set on like a couple years ago. Was I was productive, I was helpful, but I was replaceable. And I was like, this doesn't give me much leverage. Like, if I get anything in a deal, it would be a handout, not because I necessarily earned it, or like you couldn't pay someone else to just do the same thing. So I became just like ruthlessly productive. And sometimes that meant just working long hours. Like sometimes you don't know how to be efficient, and so you just got to work a lot. And I had that because I don't have kids, and my wife was forgiving. But I did that, and it started to give me opportunities in like the GP side of deals.
Can you talk to the specific things you did there? Because I think a lot of people are in your shoes, they're young, or they don't have money and they want to invest in real estate, and they don't know like, what are these value adds I can do? Can you speak to those?
Yeah, let me give like a path for somebody that is hyper fixated on like quick momentum in this space. I'm not saying this is great life advice. Like, you are going to have to figure out on your own how you balance this with your family relationships and context of your current risks and situation. But if I wanted to do this all over again, I would go to every in-person meetup that was within driving distance. I would talk to everybody there. I would follow up with them. I would do what Mike does, put notes in my phone. How did I meet them? What are they doing? What are they looking for? And when I found people that my instincts told me were good to work with, and I had a couple kind of referrals to check my gut, I would find a way to contribute to those people for free. Because they don't owe you anything. And if you're learning, you probably are a net loss if you're asking for much up front. So find a way to contribute for free in exchange for just like their attention. I mean, sometimes that's lunch. Sometimes it's just being involved in the process, right? Like, all I want from you, I'm a landscaper. I'm going to take care of your property for the next 6 months. All I want you to do is CC me on a couple of deals that you're doing. I don't even want to be in the deal. I just want to see what's going on in the deal. So contribute to these people free or at cost, whatever. And if you're working with the right people, you can then start to pull levers to increase your contribution and start to make yourself create like true value and then ask for more.
So you're able to do that specifically through operating the properties and doing all the sweat equity.
That was just my angle. I was willing to do the dirty work. I was willing to have tough conversations with tenants. I was willing to drive around town and check on problems and kick out trespassers. Like, that was just my angle. I mean, you could do it from it. If you're great at spreadsheets, then you should maybe help people underwrite deals or something.
Yeah, because the other way is like finding deals, negotiating deals, structuring deals, operating the deals. And then outside of that, I mean, you're just putting money in deals.
Yes. And I like operations for people that are coming, like, you have very few mentors in your background. You have very little like real estate influence, because a lot of times those people, they know how to work hard. Like, they work with their hands, or they're doing like hard customer service work, or, long hours. And you do have a skill that someone finds valuable. And a lot of times operations will like adopt those people, and then you can find like a longer term place to stay. That's kind of your way in the door, but
you're doing the work. You're doing the dirty work. You're doing the work. No, like Trevor and I talk about this all the time, and Mike too. It's like we love to buy deals, but once we buy the deal, like we want to come up with a business plan and then hand it to somebody and let them go do that so we can go buy more deals. Clearly our skill set's finding deals, winning deals, but to run the deal and be a good operator, you got to have people on your team that are operations. It's a different personality type. It really is a more engineer mindset, somebody that's willing to get dirty, somebody that's willing. I mean, that's just the old adage that if you want to get paid, just go do the work nobody else wants to do. I think in real estate, operations is that job.
Well, it's a hard offer for people to refuse. Like you're saying, hey, I'm going to do the hardest work. I'm not expecting much. And you can go off and do higher and more useful things with your time. I mean, if you're just focused on momentum, which is what I was focused on for years, was I just needed to make leaps and bounds. I didn't care what it took to do that. It's a very low, like I might have had to pitch a dozen people to convince them to bring me in their GP team under like raising money or something, but to work in your property management company and all I'm asking is to work my way up. I mean, it's hard to refuse. Not many people would refuse that if they have a need for it.
So. When did you get to start owning more deals? Because did you do more flips after that first one your own, or did you just start going into the partnerships right after?
I did like a couple other small deals that weren't super successful, but I wasn't making the same mistakes on each of them. So I was just kind of doing this like education turnover. I thought I was going to make money each time, but it turned out to be education. And then I feel like I just hit this like pivot point where I was, I hate to say irreplaceable, but I was just like far more valuable than I had previously been. Like it'd be hard to pay for me to be in a deal relative to what I would just take as equity. I don't know if that's a good explanation. But so then that started to open some door, and I'm taking like small stakes, and these are like syndications or just joint ventures, and I'm just taking very small stakes. And then the last year, I bought a couple more just like all by myself that have been great deals, but smaller ones. So, and I don't know, like I don't necessarily like one or the other more. I really like being in partnerships. There's certain things in these deals I don't want to do. And if I do, it will take away from my focus on operations and take away from my momentum. So it's nice to own stuff by yourself. Like it looks cool on paper when it says 100% in like the equity column. But yeah, I don't see that being my primary acquisition strategy.
What are the things about real estate you don't want to do that you like to have partners to do?
Frankly, I just don't enjoy the like underwriting side of I really like extremely deep basis, 1%ers, and like good expense ratio. I don't want to like nickel and dime my way into convincing myself that it's a good deal. I don't really want to do any of that. I don't enjoy it.
So you want deals that don't require underwriting?
Kind of. Yeah.
Dude, Cannon ripped. You bought a fourplex for what, like $400,000?
Yeah, for like I think like $480 and gross rents at close with 75% occupancy because it was owner occ were like 40 or like almost 5,000. And then today, like so 1 year later, I've moved out of that property. And that it's like a 1.25% gross.
Where'd you buy that? How'd you find it?
So that was in Vancouver. I actually, like I was doing this deal stuff. I had gotten some equity in deals at that point, and I had done some of my own. But I realized there was like I was totally missing the boat on like deep basis was working for the like small ownership side of things, but I hadn't taken advantage of owner-occupied debt. So I had like a little owner-occupied debt mechanism that made otherwise an unsuccessful deal successful. And so
because you could get the leverage, leverage hack.
It was just low-hanging fruit.
Yeah.
It was like your owner-occupied loan is just low-hanging fruit. Like you can turn a deal into success when it otherwise wouldn't work for somebody else, even if you don't get great basis. And so I just was like disappointed in myself for not taking advantage of that. And so it wasn't even like a huge allocation of my time. I was just like, I'm gonna do this, and I'm just gonna make it happen. And I don't know if it's a coincidence or if I talked to somebody about it at a meetup, but I got connected with Vesta when that existed, and they connected me with one of their brokers, and I got sent like the MLS, this is your deal box, and they send you the link with like all the listings that fit your buy box. And I remember the first morning I woke up, I was laying in bed, lights were still out, and I'm like groggy, scrolling through my phone, just going through this list of deals, and I'm literally just looking at price per door. And I'd be like, duplex, 300 a door, nah. Like triplex, 175 a door, eh. And I would just keep scrolling, and I got to this one it was listed for 600. And I looked at just like the photo, and I was like, probably duplex or a triplex. And I look at the description, it's a fourplex. I'm like, oh, 150 a door. Now we're talking. And that kind of ends up being the deal that I buy. And that one was, as far as equity, like net worth goes, pretty much the best deal.
So they wanted 600. You paid 480. Mm-hmm. How'd you pull that off?
Are we in the deal episode?
We will
the whole podcast should be a deal episode.
Kind of a good time to roll into it.
Yeah, talk about this deal.
So before we talk about that, let's not talk about the deal yet. I want to talk about AI.
Okay.
Before we wrap this one, you got to tell us about AI. How are you using AI today in ops to make your organization more efficient, more successful?
So on the topic of AI, I want to remove like a kind of a preconceived notion a lot of people have. I am not a technical person. Like I couldn't write you a line of code. I barely understand how these models work at a high level, and that's fine. Where these large language models, where these AIs are today, the reason why they are creating so much value is they are accessible by the average person. So being technical is not a barrier to entry anymore. And then to go one step further, like level the playing field, but you're scared to use it or you don't like it because of this, that, and the other reason, like you need to move past those excuses, because this is going to be like a relevant thing either for you or your competitors moving forward. I just think of AI as a productivity tool. Okay, I'm trying to use the phrase productivity tool more than I'm trying to use AI, because there are several mechanisms where you can increase productivity at a lower dollar per unit of output compared to what you can do on your own. And most of it, all of us, use a productivity tool. Your email is a productivity tool because you can send an email cheaper and faster than you can send a snail mail. Okay, so you're already using these. And AI is kind of just like the cheapest version if you can figure it out. And so that's why there's going to be a race to that. It's just because of margin.
What do you use it for? Like what programs do you use and what are you using it for?
So I do all the easy traditional stuff, like text to text stuff. We're all like consulting it for attorney work. We're all consulting it for like, should I do this deal type of thing. The audios come very far. The videos come very far. I have a couple like pots where I operate. And one of them is we have this very small off-market acquisition company, which is where we've used this the most. And effectively what we're doing is we just have, like, to kind of go through the full stack, and like I hope people copy me because this is not my core focus, very focused on operations. So you can copy this with a couple YouTube videos. But what we do is we create marketing content with AI. So it's entirely AI, be like a lady walking through a house, whatever. You guys have probably seen these on your Instagram reels. We create that. We then have ad spend on like Facebook and Google ads. And we have inbound leads of people that want to sell their properties. Those inbound leads will go to like, it'll collect their information. They'll opt in. That's why we like inbound, is they're opting in. And then they can also call us. And regardless, whether they call us immediately from that marketing or from like us reaching out to them after they've opted in, that's an AI bot calling them that is like prompted based on what, we want, how we want to frame our business, how we want to frame our pitch. That bot will collect information about their situation and it'll automatically schedule an appointment to me. And then that appointment just gets sent to my phone. And like, maybe I'll take it in person, maybe I'll call them, maybe I'll text them and say like, hey, you should go do this. Like, I'm not the best fit for you. And that's worked a couple of times. We had a couple deals that came entirely through that mechanism. Like it took some time to build that out. And so there used to be more human touch points, but there was a couple deals that we didn't touch it until I took the appointment that put it under contract.
That's cool.
So you have a chat bot actually having a phone call with these people?
Yeah. So this stuff is advancing far faster than previous technologies, which is always true. Like every new technology moves faster than the last one. That's kind of like the definition. So it's there. Like you can, if you're paying for the right models and you have like the right prompting and the right memory setup and you can't distinguish it from a human. And what we find is even if, because we don't like tell the AI to lie. Like if somebody's like, "Are you a robot?" it just says yes. Like it's not a problem. I'm an assistant. Yes, I'm a virtual assistant. Most people don't care. They want to know, like if they're kind of, like worried about it. Sometimes they want to know, but a lot of those calls when we listen to the transcripts, they finish the conversation. They don't mind. And then they're
It's funny they have to ask though that they don't know right out of the gate.
Yeah, it's indistinguishable. It's the same with video, like that you're seeing on your reels. I mean, sometimes when it's a cat with a lightsaber, like but that's intentional. There's reels now that you can't tell.
Yeah.
And so it's there, and people should be cognizant of that, like from a risk perspective.
Absolutely.
But yeah, everything. I would say that, especially in our business, which is kind of traditionally slow to adopt technology, probably anything you want to do is already possible. It's just the people guiding you to do it are still working. You know what I mean? Like at some point it'll just be easy to do certain things and it'll just be accessible by everyone. When we started building that out, my friend, so I have a partner in that business named Seth, and he's more like on the technical side. In the beginning, when we started building this out like 18 months ago, it was a lot harder than it is today. You'd have to do a lot more like manual network building than what you can do today, just plug and play. So, but in like 18 more months, anybody will be able to do it.
Are you using Claude?
I think Claude, it depends. So there's you kind of have to play this like cost per token, but like where you, relative to like the quality of the output, like equation, and you just have to decide what's fair. I think if people want an answer to this as of whatever it is, March of 26, my opinion is like Claude is like the leader, and like total output quality, like capability, is the leader.
It's insane. Like for $20 a month, and then you can refresh, or you pay $100 a month or whatever, you can use it. So we have the $100 a month one, and I can't max it out on time. I use it all the time. Like I'm building like in-depth pitch decks based on my context, and it's piecing it together. I put in floor plans to a 500,000 square foot building, and it built me all the rent roll, all the renovation costs. That's in an editable spreadsheet that I can go in and re-edit and run all the formulas on, and what is the value of this building? What is the cost to renovate it? And then I put it back in with the spreadsheet. I said, make me a pitch deck with all of this information. It makes me like a 14-slide pitch deck. And then I was like, here's our branding. Brand it this way. Brands it all that way, just in a matter of like minutes.
So one thing I'd really like to take this opportunity to get out there is I just want to see peers around me succeed. I get a little like, I love to succeed, but I get depressed when I see other people not succeeding and not feeling like they have control over their own destiny. So I'd love to see people in the real estate space, especially in Oregon and like Portland where I operate, figure this out early enough that they can reap some reward from it and not be so fearful. So what I would say to those people is start using it every day. If you're not using it at all, use it for 10 minutes a day. If you're using it for 10 minutes a day, use it for 30. And get to somewhere like an hour or two per day and just focus on incremental, consistent improvement. And you will be leaps and bounds above the competition, because like AI has talked a lot about on podcast, like it's all the craze. But if you look at like a I don't know, graph of the percentage of the population that's using it regularly, it's next to nothing.
I think 3% are actually paying for it right now.
I was shocked by that because I went to dinner with all my buddies who I hadn't seen in a long time. They work in like normal jobs, and I was like, "Hey, what do you guys use AI for?" Like trying to learn what I could use it for.
We don't use it.
And I was like, "What do you do at work? Tell me what your day looks like."
83% of people with a smartphone don't even have Chat GPT on their phone.
Yeah, and chat, like in my opinion, now compared to Claude, is useless. Like Claude is 10x better than
that. I would say, like, again, I'm not a technical person, but I would say from a model perspective, focus more on consistent usage. Try to use the newest model within whatever company you choose, but consistent usage right now matters more than anything else because the winners and losers are going to be fleshed out over the next like 10 years, and you can always bandwagon when it becomes obvious. But for now, like ChatGPT could release something tomorrow.
If you're not using anything, like use
use AI.
Yeah.
And consistent usage shows its errors, right? You'll quickly identify, well, this has flaws in this category and this does not. And you can start seeing what AIs are appropriate for the different things you're trying to use.
Well, I was using Claude the other day because it has all the information of the internet on it. Like, it's insane. So I was like, I feel like I'm banging my head on the wall, wasting so much time, and I don't know what I should focus on. So I tell Claude that, and I say, ask me questions so you understand all this information. Ask me prompts, like me all these questions, put in the info, and it helps me identify, like, what is the main focus of today that I should do. And it's like,
I'd just like to point out Trevor found his soulmate, Claude.
So true.
Trevor's going to marry his AI.
Yeah. Figure me out, Claude.
So, Cannon,
Make me want to marry you.
You talked about your process for acquisitions. How are you using AI to boost your productivity in ops?
So, I want to answer your question. But
you don't want to give me your secrets?
No, I'll give you every secret because
jerk.
I'll still drive around town and do the dirty work.
Okay, go ask leverage. Claude what Cannon's secret is.
Yeah.
So
yeah, he'll know.
What I mean to say is I'm more focused on productivity tools as a bucket and less on AI specifically. And part of the reason why is there's so much low-hanging fruit via VAs, automations, which are different than AI, and AI stacked in existing software that you could theoretically not touch AI like in a chatbot format and still like 10x your business.
Yeah. And utilize it in your email, utilize it in everything, your property management software, everything that you got.
Yes. So in like, for example, in our property management software, they have incredible scale as a software company beyond anything that I have at my disposal. So I can like manually try and create some tool that like I think might help me, but I'm actually better off just fully utilizing the software and make sure you're working with companies that are like cognizant of the utility that AI brings. And so like you can see in our softwares, if you just take full advantage of the tools that you already pay for, they're already integrating integrations either on the back or front end. So sometimes you don't even see the tool, but your cost per unit is going down because they're consolidating their stack on the back end. So there's things you can do without like using an AI company that are influenced and improved by the usage of AI. So I guess to be real clear, in my business, in the operations side of things, probably the most valuable productivity tool we have is virtual assistants. So we have virtual assistants, which is...
They're people.
They are human people that are lower cost per unit of output, that do a fantastic job. They are perfectly capable of using automations and AI as well. And so there's leverage in having them on my team. And then automations are kind of a next layer where it's like most of our softwares can already automatically do certain things. It's more linear in the sense that like you want it to send you a report every month, so it does. But like that's low-hanging fruit and it has no risk of hallucination. Like pull your rent roll from your property management software and kick you a report. And then maybe you take that report and go feed it to AI and ask it to analyze it for you. But like if you're not doing those things, good luck integrating AI. I mean, that has so many more variables that you have to contextualize beyond a VA that has a skill set working overseas, an automation that is integrated into a software company that's worth billions of dollars investing in AI. So I'm not degrading the value of AI, but like everyone's going to tell you should be using it. That's not like a hot take, but like you should be looking at your whole stack of opportunity and finding places to use it more. So one thing, this is a very real example that I think people should be considering, which is AI is like fully dependent on the quality of data that it has. And so you don't have much control over what the LLMs use as like the general knowledge, but you have a lot of control over the data that you provide it to encourage better outcomes. So the data around your business, you should be collecting in every nook and cranny that you can find it. So one very clear example of this is we do several team meetings throughout the week. And it would just be like everybody shows up, we hash out a few things, and we go about our business. Well, we record every single one of those meetings now. Even if right now today I don't know what to do with that recording, I know in the future that I can take 1,000 recordings of team meetings working through problems, feed it to some system, and it'll have like a consultant that has the knowledge of our company for the last 3 years, doesn't forget anything, and doesn't quit. So you should be collecting data in your business, even if you're not going to put it into AI yet. Just create a system for like collecting stuff. Don't delete any emails. Don't delete any Slack messages or Google Chat messages. Save everything. Pay a VA to catalog it for you, whatever. And you're going to thank yourself later, because now you can take the best AI company, whoever that is, in 3 years, and you can feed them a bunch of information about your business, and you're going to get much better outcomes than somebody that is like trying to download their brain manually into that system. They won't be able to compete with you.
Wow.
Wait, we have to finish this with your deal.
No, we're going to come back.
We got other deals there. We got to talk deals this episode. Tell us how you went from 600 to 480 on that fourplex.
So a lot of the deal, so this is why I get really excited about due diligence periods, is like a lot of times we already like the deal, but most of the time we're buying something that has some kind of pretty much all the time, some kind of management problem or some kind of like physical problem. And so that's our value add perspective. On that deal, the long story short is seller had motivation, property had problems, and the perceived value of the problem was higher than I could solve it for. And so the market gives me a discount for that, and that's where I create delta and created value on that one.
So what were those specific things that you negotiated?
So this was a funny due diligence process. Basically, I knew that they had motivation up front because their broker was like, hey, I have permission to tell you that they have motivation. Questionable. But they told me they had motivation. I already kind of liked the deal just based off like the list price and the list pictures. But when we went in and do due diligence, I go to every due diligence with every vendor. So like sewer scope, I'm on site. I go in the crawl space, I go in the attics. If we buy a 50-unit building, I will see every unit that we have a key to. And so I did that for this property. It's only 4 units. It's not that hard. And basically we come back like any property, but this one's like 1930, 1940. So with a laundry list of problems. And we just took that laundry list of problems, and I didn't want to negotiate against myself because I didn't really know where the sellers were at on like what the reality of their motivation was. So we just sent the laundry list to the sellers and said, hey, this is a problem. What are we going to do about it? And the seller said, and seller's broker, I guess, said that they don't want to look at any problem that's not in the form of an estimate. And we said, are you sure? Because an estimate is going to be a lot higher than what like I probably would be okay maybe settling for. And they doubled down. They said, no, we want it all in an estimate. So I just went out and got an estimate for every single thing on the due diligence list. And that totaled like 180 grand. And then we sent that to the seller and said, here's your estimates. Now what? And they were like, well, we're not giving you 180 grand off. And I was like, shoot, how much will you give me off? And I think they came at like, they immediately went down to like 490. And then
so they took 110 off just immediately. Yeah,
it was. They took about 110 off, and then I think we went down like another 5, and I got a seller credit. So we went down to like 180 or 485, I think.
Yeah.
But then like with some credits on top of that to help reduce my cash in the deal when I closed.
I think people listening to this, because most fourplexes are trading like that 800-ish thousand or so.
Yeah, it's worth at least 800. And to your point, this was on market for like 3 or 4 months, and I have a few real estate friends in that area, and I was like, oh yeah, I'm buying a deal. They're like, oh, what deal? I sent them the link. They're like, oh yeah, I saw that deal. So it was on market, and people saw it, and I don't know. Just maybe I'm an idiot. Maybe I missed something, but
No, I think you got a really good deal.
It's proof when you, like what you said, you sought out motivation, and once you found somebody with motivation, you just negotiated properly. I mean, you don't go off of the price that's listed. That might be where you start and say they're within reason. Maybe that's what piqued your interest about their motivation. But from there, it's like, okay, we've got a willing seller. They want to be reasonable. They want to be done. If they're going to sell it to anybody, it's been out here 3 months. They're going to have to do something to get it sold.
well, and the reality of that deal, like it's not like I just like totally outmaneuvered them. The reality is, more or less, there's like 100 to 180 grand of deferred maintenance that will eventually need to be done. And when that eventually needs to be done, it's cash out of my pocket. Mm-hmm. Cash out of my pocket is far more valuable than debt when I buy it. So I would rather have had a $600,000 purchase price with a property that didn't need anything. So really the discount like isn't
just lowers your payment a little bit.
Yeah, I mean, it lowers my payment, and someday I'm going to have to write a $20,000 check for the roof. And that $20,000 check is way more valuable. I'd rather have $40,000 in debt than $20,000 out of my pocket for the roof. So
this is why you negotiate for seller credits instead of discounts.
Yeah, well, always get a credit, but get a discount if you can get that.
I don't know if your lender would have been cool with you taking $120,000 credit, though.
There's caps to those things.
I'll pay you $1 million.
Yeah, I think
give you $600,000 back.
Yeah, I think a lot of people pass up on deals because they look at it and they're like, it doesn't work at that price. But like, it's been sitting there for 3 months. Like, if they actually want to sell it,
price.
Yeah, there's some way to do that deal. Like, just figure out what their motivation is and how you can make it work. Because they're not going to do the deal if it's not a win for them. But you're also not going to do the deal if it's not a win for you.
Yeah, and
Timing matters. Timing matters. There could have been 50 people ahead of you that offered 600 or 550. They never accepted the offer. They waited to the point they got motivated. They accepted your offer, and then you had leverage.
Yeah, and I mean, I think for the average house hacker, because that was a 4-unit, so your market is probably more of a first-time home buyer type. Maybe someone that watched Bigger Pockets and thinks, okay, I'm gonna buy a house hack. The property was intimidating. Like, the only reason I wasn't scared by some of those concerns was I deal with value-add properties all the time. Yeah. And so to me, half the stuff was actually better than what I'm used to seeing. And so I was the right buyer. I mean, they sale failed like twice. So I wasn't even the first in line for this deal. But because jumping in to the deep end with other people's money on the operation side, like then when my opportunity comes, I've been through it before and it wasn't at my expense.
This is awesome.
Good.
Cannon, thanks for being on the show with us today. Cannon St. Peter, Director of Operations for Peak Asset Management. If somebody wants to reach out to you, ask questions, I know you're willing to share your wisdom with them. How would somebody get a hold of you?
So I don't post on social media, but I'm active in my DMs.
Lame.
So
do you have a chat bot they can reach out to?
Yeah, text me and I'll never see it. No, Instagram or LinkedIn, just my name all spelled out. There's not very many of us. Just like it is on this episode, spell that out and you'll find me, and then just DM me and I'll give you my number or something from there.
All right, guys, that's Cannon St. Peter, Peak Asset Management. Thanks for being with us. Deal Junkies, we love you. Please share us with someone you love, and we'll see you next time.